JH Trading here. This is going to be my analysis for Monday, which is going to be the date of March 17th. Okay, this is going to be my analysis before Monday, March 17th. I'm going to be analyzing the charts and giving ideas on levels for this upcoming week. Uncut, no editing or anything. So first off the bat, as you guys can see, when the market closed this week on Friday, we closed high after Thursday, closed low, and broke low. I had seen this coming, believe it or not, because guess what? If we close low, this is a very obvious whistleblowing sell off, right? Like this is very obvious short. And when something's too obvious, the reverse is also obvious. It's like quantum physics. Once the bears exist, the buyout exists. And that's exactly what happened. We closed low, Friday opened high, the bears got squeezed. I didn't anticipate anything for Friday actually, because we closed low. And I was thinking it's a 50-50. This can happen. I don't know. I seen this coming, but I didn't anticipate it, in isolation. I was like, we could either go lower down here to these lower levels that I have. I call this level the DSD, double standard deviation zone. Or we can squeeze these bears out. And Monday open, we squeezed them out. I didn't buy the market because I woke up a little too late. I woke up like 7 o'clock. The buyout already happened. And as you guys can see, we came back up to test the low of last week, Friday, the low of Friday. Not only that, we came back up to test the 50% retracement, as you guys can see. And I had predicted this level. But I did not play to this level. I was a bit too stupid and too anxious to play this level. But this level did bounce, and this level is the double standard deviation. This is the DSD. As you guys can see, Friday closed high, we opened lower, and started squeezing these bulls who got in right here. Like how the bears right here got squeezed, the bulls right here got destroyed out of their positions, and this went down 2 standard deviations, right? It went down 1 standard deviation, and then another one down here to this standard deviation. This makes it 2 standard deviations. And as you can see, as we come down here touching these lows, we start bouncing up. And we started bouncing up. We actually didn't check if these bulls did not get relief at all Monday. They got relief Tuesday, and then we hit the full 50% Wednesday. As you guys can see, we came back up to touch the 50%. And as we closed this Friday, we came back up to test this as well, and I was actually able to take some shorts as we came up to this high. You see these wicks. I actually shorted these wicks and made back my loss from my overnight position. Make back like a $200 loss, so I like broke even for Friday. Anyways, we're going to talk about my outlook now. Now that we're done talking about what happened. So, there's 2 things this market can happen. There's 2 things, well, Excuse my language. It's just not perfect and it's never going to be perfect. But I think there's two things that can happen here. We can squeeze back down and open lower and continue lower down to the double standard deviation zone, as you guys can see. If we come, since this close high, and this bottomed out right here, the double standard deviation zone is going to be down here. Or we can go higher, but the reason why I think we can come back down is there's a lot of bullish anticipation in this market. There's a lot of bottoming out. The sentiment that we bottomed out is very high right now. There's a lot of people buying. And because there's a lot of people buying, there's a lot of retail traders in the market buying this market up. They're buying calls. And you know, if there's a lot of buyers in this market, now the sellout potential is realized. Is real. The potential to sell out is there now. It's like quantum physics. But then the second possibility is we come up higher to test this trend line right here. I've been looking at this for a while, so you guys can see. After we broke the trend line and opened lower on Monday, we never came back up to test it. And it's a pretty prominent and strong trend line. Look how much this supported. Supported once, twice. So it's clearly being used. And if it's being used, it's a good chance we might come up and touch it before going back down. So that's my two sentiments for what's going to happen. That being said, we also have imbalances. We have the people who shorted Thursday. We got a lot of shorts right here. Right here. Let me put it to the hourly chart. As you guys can see, a lot of shorts right here at this level. So we can actually come back down and break the lower Friday and test this imbalance right here. Not only that, we have the close imbalance, right? Thursday closed low. That means there's a lot of sellers right here who sold on Thursday. We can come back down and clear this level. Not only that, we have, like I said, the double standard deviation zone right here at this bottom. But the weird part is, if we come back down that low, I think we'll just break the bottom and go down to the next level. Like, it's a very big possibility. If we're coming down that hard, I don't think we can actually support these levels because there's too much buyers. There's too much buyers are going to sell out once we start breaking, once we start coming down, because it's a bearish market after all. So I have breakdown, breakthrough, break up, test this level, or come back down to equilibrium and just stay here at these imbalances. That's three possibilities I have for Monday and the coming weeks. The coming week, singular. And then we'll, about that, we'll just have to see how the rest of the days play out and close. So yeah, that's my outlook for these coming days.